Ladies and gentlemen of the crypto space, we're live on Monday, December 18th at 11:31 a.m. So we're off to a boring, slow, malaise start for the week. Looking at Bitcoin, it's about flat. Looking at Ethereum, it's down 1.75%. These are relatively normal volatilities that we are accustomed to. Title of the stream is Debt and Rebirth. So what is imperative to understand about high volatile markets is the overall structure of the system. And the system imparts a directionality. It provides incentive that encourages behavior, and that directionality ultimately manifest volatility in different markets, and the different markets will experience volatility proportional to the summation of the type of actor, the expectations of the actor, and therefore the effects on different markets you really have to inspect granularly. Now, this is why everyone talks about passive flows into equity markets. This is part of the construct of the entire country. That's why they made 401ks to support, to keep equity markets inflated. People's work salary is literally funneled directly into various shit in the stock market. That is not the case with crypto markets, which is very much why it is significantly more volatile. It is much more organic in that regard. 401k passive flows aren't organic. It's literally yes, obviously employees opt into 401ks, but it is unelected, is unthought through. It's an unconscious flow of capital. In crypto markets, it's very much a conscious flow of capital. So in many regards, the crypto markets are the last remaining organic market on this planet that has liquidity, has a capacity to actually buy and sell across the landscape of nation states. So that's why it is so damn volatile. Debt and rebirth. So nothing has changed throughout 22 and 23 with regard to everyone's sentiment and expectation of some sort of catastrophe. Why do I mention this now, as 23 has experienced a significant amount of appreciation? Because the system collapsed. The system failed in March of 2023, much like the system failed in September of 2019. The system would have been deflating into a collapse where currencies no longer are functional to incentivize not just behavior, not just labor and productivity, but social civility. The ATMs don't have cash and supermarkets don't have food. Things get pretty crazy quick. So we are in a system that collapsed, but it didn't collapse because there was intervention. And that intervention was to the extent that deflation was prevented, which another way to say the system was inflated. The opposite of deflation is inflation. It's like if you don't spend money, technically you made it in some regards. That's an argument that's made, at least by working parents as they try to explain financial matters to the rest of the family. So cyclicality is a force of nature. And cyclicality with regard to debt ensures the continuity of the system. So the new debt that comes into the system is used to finance old debt that is maturing. So this is basically the core of our current financial system. New debt pays old debt. Debt doesn't get paid off. Now, this is not intuitive at the retail level, the general public. The general public pays their debts. That's literally how everyone lives their lives. But when you're at a large enough when you surpass a threshold, you're financing expenses, you're financing the acquisition of materials and labor, and you're writing off. So you're extracting capital not just by income, but you're literally writing off your losses, depreciation. So interesting things like cruise ships and shipping come to mind, and I can only speculate to the extent in how they balance their books. But those large items that are in many regards consumables, but consumables over 10, 20, 30 years, they don't get paid. Nothing gets paid back. You think they paid for the construction of a $500 million office building? It's paid with future expected cash flows. If the financing requirement is $100 million a year and the building is pulling in $120 million a year, okay, the building is paid for. And the $20 million is profits. But it's not like they're paying down the principal in any meaningful way such that, in 20 years, the building is paid off and the debt is serviced and complete. That is not the way the current construct works. So, the system requires the refinancing of that debt. So if you're not paying off the principal and the term of the loan is 5, 10 years, that means you have to acquire a new debt instrument to pay off that original debt instrument, and that new debt instrument has financing terms, how much you have to pay for it each year. So that means we are waiting for the expansion. We are waiting for the rebirth of debt expansion, I guess symbolized or attempted to be symbolized by this imagery that I have presented. And when that expansion occurs, debt is used to finance the operations, everything that we see, materials and labor and building and construction and manufacturing. And then that debt instrument is in turn used to create currency in the system. That's how perverted the system is, or that's the construct of the system. And that's why when we look at stuff like M2, it has this kind of directionality. It's not, do we have, for instance, in 23, population growth year over year for the United States was 0. I think it was the first time in history that that was the case. And this is the study of demographics. So it's not like we have more people making more money and more money is being added to the system at the M0 level, is being printed into the system. So money is a funny thing. And it's not as simple as people think how it's created. So people create money. Activity creates money. Corporations and government create money, and they create money by borrowing money, and ultimately the mechanics of that is those debt instruments are converted in turn into more money, and that is the money that cycles through the system. So we've had contraction. This is actually some of the largest contraction. If you inspect this year over year, this is the largest contraction in history of M2. And you can obviously imagine what it's like to have data from a global perspective. And if we're talking about cyclicality and the rebirth of debt, so if we are coming off the heels of the largest contraction of currency supply year over year in history, what comes next? Well, it's one of two things. It's either, hills have eyes, cannibalism, and post-apocalyptic scenarios, or expansion. Expansion for what? To do what? To pay the debt. You take on more debt to pay the debt that's maturing. Who's going to be the first person to do that, or the first entity to do that? Well, In 2024, that's the U.S. government. The U.S. government has to pay was to refinance $10.8 trillion worth of debt. So they're not paying it off. They're paying it off and creating new debt, so it's like they're not paying it off. And that new debt has different properties than the old debt. So the old debt is out there in circulation. It's being used. It's rehypothecated many times over, used to create currency. What currency? The currency that you use on a daily basis that has filtered into the banking system. That is in ways related to your deposits, probably a variety of layers separated, but no less the cumulative construct being bank money and euro-dollar money. And this all contributes to the overall composition of these things we call dollars. So if they're refinancing $10.8 trillion next year, the old debt has created a lot of money, which exists and it's in circulation. And this new debt is yet to be rehypothecated and yet to filter into the system to attain the characteristics of the old debt. And when I say debt, I mean treasuries or whatever the hell they're issuing to replace $10.8 trillion with. So what's most important is to understand that when they say they're going to issue $10.8 trillion they have to execute $10.8 trillion worth of refinancing next year, that means not that they're going to add $10.8 trillion to what Mike Howell talks about as a $270 trillion system of liquidity, because some of it gets lost in the mix, I would imagine. It's not like, and there's also the rehypothecation component. So whatever the net result is, will be significant addition of currency to the system in 2024. Some will get paid back, part of the mix. Some will go insolvent and just evaporate in the mix. And not all of the issued new debt will be rehypothecated 20 times over. Some of it 10, some of it 5, some of it 2. So the net result, you can reliably and reasonably say, will be the addition of currency to the system. It will start to expand. You will start to see this number go up. That's the cyclicality. And what's going to be interesting is, for the number to go up, they're cutting rates. They won't go back to zero in any regard. I don't just see that at all. But it's the combination of the macroeconomic conditions that will facilitate the currency expansion and the refinancing of these debt obligations. You know, it's kind of like chicken and the egg. Does the dollar coming down and bond prices, treasury prices in particular, going up, allow, and Fed funds rate coming down, allow the refinancing of debt, or does the refinancing of debt allow the currency to expand? I don't know. It's the whole chicken and the egg shit that everything is connected to everything. It's very complicated, the process. So that's why I simplify as best I can in my layperson's or whatever mind I have to try and understand this shit. Dollar down, bonds up, Fed funds rate gets cut, 10.8 trillion issued next year. That's a trifecta? Is those three conditions? That's the trifecta of conditions to flood the system with capital. And what does flood the system with capital mean? That means persons that have a capacity to access capital now have a choice of what to do with capital that's available. And now what comes to mind is stuff like the increased rate to borrow at and the notion of malinvestment. So in 24, I see some of the wildest conditions based on my understanding for increasing currency supply in the system. An increased interest rate set by the Federal Reserve, which will affect the decision-making process for where capital is allocated. So if you combine the cyclical nature of this currency system we have as humans, 24 with a significant increase in currency supply in the system, with a landscape that says you got to invest your shit differently, I find that very interesting. Why? Because most people under certain ages only know the stock market between post GFC, post the global financial crisis, which was defined as growth. As you invest in a stock, other schmucks invest in the stock price goes up, and you could sell that stock for more money. And I absolutely hate that reality of investing. There's something that always ringed true with me in the past, and it's very much the case to this day. I want investing to mean something. I want to own something that is meaningful, that's of systemic importance, that has freaking cash flow and doesn't just suck the money out of your pocket by issue. So the stock price is going up. Oh, this is a great time to issue more stock because obviously the general public has a demand for the stock. So let's give them the stock. We're going to print the stock and we're going to sell the shit to them. So it's a capital raise. And you can obviously talk about that in terms of like monetary policy. Oh, this is the right time for a company to issue stock to raise capital so they can invest in R&D. They can invest in stock buybacks. What the fuck? So literally corporate QE. But no, not for me. Why? Because that's the discretion of humans operating a company. And that just seems so damn perverted to me. So I've hated investing in the 2010s. Absolutely hated it. And I can't say I have nostalgia for the days that Buffett talks about. I wasn't alive in those days where value investing was meaningful. And I think even the nature of what is value is getting redefined in many ways. Not that I fully appreciate it in those old traditional, or the old traditional way was defined. But what is value? Value to me is the concept of cash flow, is prudence, of leadership, responsibility, and reinvestment and research and development and growth, and having appreciation for employees and taking care of people. Yeah. So I see that as desperately needed for the investment landscape in the traditional markets and in corporate equities. And I hope that's the case, that higher interest rates causes that. And I would love to reduce the directionality of interest rates leading to gross malinvestment over the last 50 years, and the directionality change of interest rates leading to favoring value over growth, and value being how I just defined it. And I would hope that's the case for equities. But I obviously see many interesting things with regard to the crypto markets, which is why I define it as a better investment than even what I just defined as value from a corporate perspective, corporate equity perspective. Because there's no damn people here, which means it's treating its employees well. It's pure cash flow. That's crazy. How many times have I said that? That's crazy, because that's what this shit is. This shit is crazy. So this can't come down. This is M2. This number can't come down. At some point, it needs to go up. Otherwise, we're all in Mad Max and we're going to be playing at Beyond Thunderdome. We're playing at the Thunderdome. But we're going to have to wait. This is gas prices. So gas prices bottomed at like 197. If you've noticed, I'm sure you've noticed gas prices are significantly down when you drive by gas stations, or you go to gas stations if you still drive a gas car. But it bounced very nicely on the 6-month time-weighted average price. So commodities are going to be an interesting thing heading into this new regime of higher highs and higher lows on interest rates, and we're really in a situation where we have to contemplate how high can they go, and every country has different realities. So a lot of this about face that we've seen over the last week is Japan and their fiscal condition, and them saying they're going to raise interest rates. How the hell are they going to raise interest rates? Where the yen's going to be worthless, and then the dollar goes completely vertical. So I don't see an answer for this clusterfuck other than very significant geopolitical collusion. So that's the reality we live in. And sure, part of me always wants to be angry at this reality, that we're literally dealing with countries colluding with one another for geopolitical means. I mean, I'm sure this is the way it's been throughout all of history, except more crude and longer time frames to send the goddamn carrier pigeon across the Atlantic. Or you can imagine how slow shit was back then, but now it's real time. And now the general public gets to see it with social media. Back during the global financial crisis, and dare I say like 9/11, there was no social media. You knew nothing. You saw newspapers. Or if you lived in New York, you literally saw what was happening in 2001. You saw it on TV, and then even that was, maybe that was the social media of the day. But now that social media is even changing. Everything's changing so quick. I'm only 40, but it's so different than when I was younger. Anyway, that's my thoughts on a Monday. I don't think we'll... So this is path. The path is going to be any which way. And I would say the same thing that I've been saying. I think the skew is upward. Because people see the destination. And that's exactly what Raul's talking about. And Mike Howell as well, from different perspectives. The destination is significantly increased liquidity in the system because of the debt required to finance all debt. And the reality that treasuries are used as collateral for credit. And that credit isn't a dollar, but it's a bank dollar somewhere. So therefore, it contributes to the overall composition of dollars in the system. So the destination is clear. Otherwise, there's no re-election. Otherwise, there's nothing. It dies. And you don't bet on the system failing. And the only way you prepare for the system failing with a bunker, just like the movie on Netflix and whatever other post-apocalyptic scenario you can imagine. So if the system persists, you own assets. You own assets, hopefully, that are favorable in the conditions that are coming. And the conditions that are coming are different than the conditions that were. Maybe when I was in college, I could have bought growth shit, and then I would be playing the growth stocks in the 2010s is kind of like what you youngsters are doing with meme coins. Because there was no meme coins in the 2010s, so you played on the stock market and you bought shit that went up in price, and it was all trading and player versus player and capital gains. Those are the meme. Those are the meme coins, the meme stocks. But now there's meme coins, which are much easier to interact with. Permissionless, instant transactions. Do you know in equities land it's T plus 2 or whatever the settlement is for the respective instrument? It literally takes days for the transaction. Days! What kind of archaic shit is that? Every time I hear the time it takes for an ACH or the settlement of an equities transaction, I'm like, you fucking old people. It's insane because comparing that to a swap on whatever platform you use, Uniswap, the transaction is relatively instant. You give something, you get something. T plus 2 settlement. What kind of insanity is that shit? All right, this is gas. Folks will have different opinions from a technical perspective on different time frames for Bitcoin and Ethereum. Generally speaking, I would say there's a premium, and there's plenty of room for significant depreciation from here. If you go out to the 3-month chart, which is a quarterly chart, you could literally have a retest to 32,000, and that would be a higher low. That would be significantly higher than 26,000. 32,000? So that's a great number. It would look pretty good on a technical chart if you go 4 quarters into the future. You're looking at 2025 and, back in Q1 2024, price retreated to 32,000. You know what you'd see on social media? Bitcoin's crashing. The end is near. Meanwhile, that looks great from a technical perspective. That would be a lovely bottom. Be a higher low. And then Q2, Q3, debt refinancing, that from the federal government, and that debt is used to create currency, and that currency floods the system with liquidity, and how everyone's talking about what's going to happen in Q3, Q4 24, probably leading into Q1, Q2 25. All right, so path is going to frustrate the shit out of you. But the destination is obvious considering the way the system is constructed at this point, which is exactly what Raul highlights. The system is just the balancing of the equation. I mean, as much as historically they allowed the business cycle to occur to a much greater extent, it's quick and easy to assume that their interventions of late, like the BTFP in March of 2023, was for one of two things. Either their mandate, which is to smooth the business cycle, that's literally the purpose of the central bank, or it's what's argued of late that they cannot really allow the deflation, because that'll just hasten the failure of the debt-based system, because if you allow any of the big banks to fail at this point, there's contagion, and everything in social media is instantaneous communication, and the destruction of capital has the potential to cascade from system to system to system, exactly like it did in 2008. So they can't let that kind of cascade occur. Otherwise, you need to bail out somewhere. Otherwise, it all comes down. The ATMs don't stop spinning out cash. So they intervene either way. Literally, 2008 is an interesting one. If you watch some of the movies, not just Margin Call, but Wall Street Money Never Sleeps had some good verbiage and scenes, and obviously Big Short. Everyone loves The Big Short. I think Wall Street Money Never Sleeps has some scenes that I think about a lot. maybe even more so than the Big Short. I mean, margin call is just like that's a good one, but the money never sleeps. I think about some of those scenes often. It's all fairy dust, and all this would evaporate. Everything, your normalcy. You'd wake up and there's no job, there's no work, there's no food in stores because people need to be incentivized to get your food to the Publix. Incentives. So the system continues. The liquidity will cycle, and different conditions will occur that tell people or encourage people to allocate capital differently. And we talk about these crypto systems because these systems are the shit. These are significant improvements on traditional systems, a distributed ledger compared to banking. I mean, literally, that was the original conversation about Bitcoin. All right, it's a distributed ledger. How do you prevent double spend? And how do you prevent mutation? And they did that. Obviously, Bitcoin is not going to be able to do what Amazon does from a distributed ledger standpoint, but it's the start of what it means to disintermediate or decentralize centralized storage, centralized databases, distribute the ledger. This is the beginning of something big because that, literally, I'm just getting broad crypto here right now because that means everyone has a capacity to contribute to what Amazon does for a business. We're talking about data storage and compute. We haven't talked about the word compute since like 2020 or 2021. Decentralized compute. That's crazy. We tried to speculate on some stuff coming out in 2021 for decentralized compute. That's a monumental concept. I mean, literally, I'm talking to you from a computer that has a centralized capacity to compute. You're listening to me from such a machine. What is the concept of decentralized compute in a world where bandwidth is 5G and it's like gigabits per second? And what happens when it's a higher bandwidth? Everyone can compute for everyone and store data for everyone. That's a very different world. There's no need for a processor, a small processor, to facilitate, chip instruction and the communication process. But the big processing doesn't have to be on your local machine. The storage, the same exact thing. You have local small storage for relevant things, but that storage doesn't have to be on your machine. That's a very different world. And that's what this entire space is about. And that kind of distributed ledger, the thinking about how everyone could contribute to a system that was historically centralized, obviously percolated ferociously with the concept of money. Because money is an incentive system. So decentralized compute was put on the back burner. Decentralized file storage. It's there. It's meaningful. They literally had a place in congressional hearings. Was it Filecoin? That was big. But that's a back burner compared to money. Because money, what makes the world go round is money is the incentive system that actually gets any of this shit done. That's what drives behavior. And that's what maintains social civility. And that's why we see government do what they do. The politicians say what they say. Regulatory authorities do what they do because they're attempting to express their subjective opinion of how to maintain social order and protect the vested interest of the centralized authorities. the integrity or the continuity of the centralized authorities that give rise to this current incentive system, incentive regime. These are certainly competitors. Bitcoin is certainly a competitor. Can it do what the dollar does? No, you have no idea. We have no idea what it would take to do what the dollar does, because that's the culmination of this entire construct that has developed over however long, since 1776. Pick a time to compare to and how long it's taken to get to where we are. There's no such thing as drop-in replacements. It doesn't work like that. So the dollar's not going anywhere. Oh, there's a chart that I was going to show you guys. It's an interesting one. Dollar's not going anywhere. So we take into consideration everything we've talked about thus far in the stream. That's going to go up, up, and up, because new debt is used to pay for old debt. Unless tax receipts go up. So these are things they may try and play around with. I don't think they're going to get away with increasing taxes. I'm pretty sure most people are sick to their stomach when they think about taxes. You work and, they're just going to take it from you. That's what taxation is. At least at very much a federal level, because sure, we want to see results for our taxes. We want to see military. We want to see infrastructure. We want to see research. But the second you start thinking about the salaries of dumb shit politicians, that makes you sick. It's the waste that makes you sick. So that's an interesting thought with regard to on-chain and blockchain, is accountability. That would change the equation. You could know where every penny is going, so to speak. That would change the equation significantly. But without those tax receipts going up, without this equation changing, these are the projections. So this chart on the surface says the debt is going up. But we talked about this stream thus far, that debt creates dollars. Dollar liabilities, but dollars no less. So this is a chart of dollar liquidity in the system projected into the future. So then you talk about real appreciation and nominal appreciation. I don't need to distinguish, for the point being that if you have you're going to significantly increase the dollar liabilities, the dollars in the system, the price of shit is going to go up, especially the price of assets. Now, there's so many mechanics involved in real estate, and there's a lot of mechanics involved in consumer prices for foodstuffs, consumer staples, so on and so forth. So I've talked about there's, pathways or scenarios that come to my mind where you have relatively muted consumer price inflation. Commodities and energy is a hard one, but there is scenarios where I see muted consumer price inflation and ridiculous asset price inflation. So that leads to systemic instability. If asset prices keep going up, if Bitcoin is $2 million and the stock market triples from here, and everyone's still making $15, $20, $25 minimum wage, and home prices, let's say home prices stay the same where they are, give or take, still out of reach of many, but that's going to piss a lot of people off, because all of a sudden, all the folks that have been involved with crypto for the last 4 years, and Bitcoiners back even further, are a new ultra-wealthy class, and everyone else is left behind. So you get that disparity between the distribution of wealth. So that leads to, I see literally scenarios where you have potentially even consumer price deflation, and you're still heading on the pathway to social unrest. If enough of society, if 10% of society all of a sudden became ultra wealthy, and everyone else was left behind, and consumer prices were going down, There'd be a lot of salty people. Do we even have to stop and think about the composition of the population? How salty people would be? They'd be salty AF. Kaizen, good morning. Shishk. Aura sitting at a lower low. Yeah, big price depreciation on Aura this morning. It was a dump to like 68, 69 cents, up to 73. Variety of thoughts and statements that could come to mind. Looks like it's hovering at its floor price, which means actors are stepping in, which is interesting unto itself. From an opportunity perspective, that's probably not a conversation which I have the energy remaining in the stream for to entertain. From a comparability perspective, how does this compare to other federations? I'm sure folks can quickly assume what I would say. This is not as strong of a federation as compared to Curve Federation. It's clear, albeit I cannot say the strength of the curve price is there as well. It has depreciated significantly. It's off the floor much more than Aura, but this is basically floor price at the 40s. Now you could go back and there's your floor, and it's off the floor. It's in a technically better. It's in a structurally tech. The damn technicals look better. Technicals look much better on Curve. Aura is much newer. It came out like in what, end of 22? I think it was the end of 22 actually. Um, anyway, I think they complicated. Yeah, but that was a big dip, and it's paying. There's a lot of people that are financing boat rentals, so it certainly does pay. How to consider, the volatility of your principal price is another story. We keep an eye on it. That's why I have it up there. Tapsy's in the house. DeFi Futurist. One Curious View. Diego, a pleasure. M Nava. Influencers are all promoting taking profits this cycle. If BTC could hit 500K next halving, why would anyone sell this cycle? Not sure why you sell your BTC if you didn't need the cash. Yeah, but that's part of standard operating procedure. People always need cash. Especially when you're talking about a composition of a population. Let's talk about in terms of Bitcoin. You have a population of people that are interacting with Bitcoin. At any point in time, there's always someone that needs cash for something. So that is a reality. So the whole directionality of price is on average at any given time, do more people need cash versus the quantity of persons that want to allocate capital to Bitcoin. And that's your bid, your ask, your buys and sells. And that culminates in overall directionality. So we're talking about cash management, MNAVA. It's Bitcoin, Ethereum, anything that you hold spot. And those are the calculations for those types of assets. Anything that you could liquidate to facilitate or finance a settlement. So when I say finance a settlement, that basically means walking into a supermarket and swiping your credit card to walk out of the store without a security guard stopping you. That's financing a settlement. I should do that more. I should put these terminologies that I use into practical terms that everyone could understand. So that is the case with the cash position of the portfolio. If you have Bitcoin in your portfolio, now it may be favorable to not use the Bitcoin. Maybe you have Ethereum in your portfolio and you would favor using the Ethereum, or maybe you have USDC in your portfolio and you'd favor using the USDC to finance the settlement at the supermarket. maybe you work and you literally have a bank account that you could use to finance the settlement at the supermarket. These are very complicated, management processes that I think about very granularly because I deal with them myself. But there's also people that don't work, and their entire process of financing settlement at the supermarket is their activities with assets, with crypto, with equities, traders, day traders, so on and so forth. So at any given time, there's always someone that needs to sell, which is why these markets are always moving. Hope that helps. Raul, Killis, a pleasure. I watched Enron last night. Yeah, that was pretty naughty stuff. My man, good history. Good to know these things. It's what these damn shitcoins are. Look, I use that term. So just remember when Bitcoin maximalists use that term, they generalize an entire sector. They just they don't have a capacity to think in terms of enterprise. They certainly don't understand the global financial construct. Um, that's just the truth. But I use that term for a coin, which is a token, which is an ERC20 that has been deployed that is literally like a boilerplate ERC20. It's, transfer to, you're filling out max quantity, that's it. And then you just slap on a website. There's nothing to it. It's hot air. All sentiment, all PvP. So that's what I define as a shitcoin. Hope that helps. Um, some humans so greedy. Yeah, I mean, yeah, ain't that the truth? A Sark goes in the house. Hey, Cap, I had a convo this weekend with some people regarding why I'm in crypto. I told them that I started to understand the debt system in 2020 and I'm here to outperform. I think that is a true statement. It's obviously a generalization, but yes, the amount of dollars that will flood the system based on the debt construct and the amount of debt that needs to be issued in 2024, the odds are a portion of that new currency will flow to crypto markets, and that new currency has a significantly greater potential to cause price appreciation in crypto markets as it does as compared to equity markets because of size, because of market caps. If you put $1 billion into Apple, it does nothing. If $1 billion flows into the crypto markets, it changes everything. Crypto outperforms, NASDAQ outperforms, S&P keeps up with global liquidity. I firmly agree and subscribe to the way Raul talks about where we're heading, the destination. And I think that that tier, those tiers of what will do better price-wise, make very much sense to me. Hope that helps. Dan's in the house. Assume good morning. How do technicals look on convex versus aura? All right, so we've already looked at aura, and it looks like a disaster. Let's take a look at convex. Convex looks like curve. Floor price, bottom, a breakout retest. Same with curve. Breakout retest on the daily 200 SMA. I mean, but here's the thing, and this is what I see when I'm looking at charts. Every chart looks very similar, especially when you see like breakout retest. It's the same thing, but it's across the entire space. Just assets just everywhere. It's just the same structure. So breakout retest, 200 SMA in the daily, and resistance. 50 SMA resistance on the weekly for convex. Monthly, 10 SMA held as resistance. Time weighted average price, even more meaningful. Held as resistance on the monthly. You're not going to get the 3-month or the 6-month. It's too new. So this is probably the highest time frame, most meaningful technical perspective for convex. Monthly time weighted average price. Rejection. Breach to the upside, and we'll start to see our new market. And then everyone will say, damn, you bought it low down here at 350. It's pretty good. I think the charts look great. I think this chart looks great. But you have to understand how my opinion becomes what it is. And it's because this chart is not expected to do bonk percentages. It's expected to go up, but it's also expected to be understood this is an incentive regime. So the expectation of multiples needs to be calculated and reasonable and rational. So we've talked about these things, but it's important for me to remind folks of my expectations. And an expectation of your portfolio doubling is insane in legacy financial terms. Think about your damn 401k. What's your expectation for your 401k to double? Okay? So the fact that these assets have the potential to double in price is extraordinary, which means out of the entire sea of the crypto market and all the bullshit that we know is in it, pick good things and you'll see the multiples. You don't have to sit there for 24 hours a day looking at the stupid technicals on bonk. Bonk. Zoom out. There we go. You don't have to sit there doing stupid shit. I mean, but look, you can sit there doing stupid shit and you get 10,000% on the money with a stupid meme coin. Look at these numbers. Big volume. Anyway, 24, 25 are going to be interesting years. Compare back to an important thing to be able to do is to assess how you've done, how well have you done. Compare back to 2019 and 18, and then compare to, it's not the all-time highs in 20 and 21 that matter. But if you could compare Q4 2019, Q1 2020 to good parts of 22 and 23, heading into 24, and it's like, oh, it's really good numbers. That's great. It's not the all-time highs that matter, because that's the all-time bullshit. Let's wrap it up in a couple. Convex is more nuanced, in my opinion, since it controls more than just curve compared to Aura. Basically, Aura is just a balanced derivative by now. Stuff like that. These are types of considerations. And Convex owns FXN, it owns Prisma, it owns Frax, it owns Curve. So it's a heck of a federation participant, if you ask me. So that's a deterministic observation, or that's real. So it's meaningful. Take it into account. I've been debating back and forth on taking a Prisma position farming, given I have a decent convex position and FXN as well. Can you please give your thoughts? I've restrained myself from deploying any capital through 22 and 23. I've been very methodical and calculated, and I've right curved the shit out of it, which means, one, I underperformed, because left curve outperforms. Mid curve is screwed. I've taken 4 positions, as we've talked about, in 22 and 23. Liquidated nothing other than financing obligations, and that's with the cash component of the portfolio. Prisma was a freebie. Prisma was an airdrop, and it was a tax favorable airdrop because it was locked. It was not redeemable, and that's interesting. So I've been LPing Prisma, which is the liquid. You're LPing. It's a liquid part of the portfolio. It's cash. It's not an asset. It's not an investment. It's transitory cash. I could liquidate this back to Ethereum, Bitcoin, or stablecoins, or I could finance settlement at the grocery store if I wanted to. So Prisma looks interesting. It's important to get a little afraid of this rehypothecation of the stability pool. Um, what does that mean? They rehypothecate the shit out of treasuries on the planet. It's the nature of the global financial construct. So it has the potential for deflationary impulses. Okay, so we're rebuilding aspects of the financial system which we understand and we know exist. So rehypothecate, grow, let the currency units make more currency units and credit make more credit and credit makes money and all that shit. At least it's all on chain. At least it's all permissionless, which is unperverted. It's unperverted. Everyone can see what everyone's doing. There's nothing hidden, and there's no printing outside of the deterministic rules of the software. And that unto itself means even if you're rebuilding shit that we've done in traditional finance and we're so critical of, at least we're doing it in a way that's interesting. Immutable and deterministic. Governance driven. Governance driven. Think about those damn proxy votes you get in the mail with regard to equity voting. Proxy votes. Oh my God. In this instance, you're voting in real time. These are real votes. These are equivalent to those stupid proxy mails you get from the post office. So I like it. So Dan, I like Prisma. I like what they're doing. I like liquidity. I think Prisma is liquidity just taken to the extreme in every regard. Tokenomics strapped on, so on and so forth. So I look forward to seeing what this thing does. So my position is just a freebie. I'm just locking everything I get, and I'm the only insane person out here that locks it as VE Prisma. I'm not taking CVX Prisma. I'm just locking it, and I have that button pressed, the auto lock. I'm the crazy guy that's just locking it, and my sentiment is I'll check back in 5 years. I'll check back in 10 years. That's what I'm here for. For what everyone treats how everyone treats their 401k, but their 401k isn't going to do fucking shit for them. This is the type of thing that changes everything in 10 years, and not just this. My hand gesture isn't to this just the protocol. My hand gesture is to these types of systems that are being built in crypto markets. This is the type of shit that changes everything in a 10-year period. You know what a fucking 401k does in a 10-year period? It does jack shit. It's embarrassing. Last two questions. How much is a doable amount to be in convex? It's subjective, but you have to assess your expectations. I believe the current vote rental revenue is about 19%. So assess principal volatility, and with regard to vote rental revenue, you're talking about the XYZ equation. How much does it cost? How much is it paying? And how likely is it to continue paying in the future? So Z has more favorable considerations than unfavorable. Clearly, there's plenty of argument that we all know too well about the end of the crypto market, so that's still in that calculation. But 19% is a hell of a number compared to the risk-free rate of return on sovereign shit. So you're getting paid for the risk you're taking. So that's your X and Y. And then Z really contributes to position size, how much risk you're taking, so on and so forth. So 20%, 10 grand a year is paying you 2 grand a year, a little bit less. And then you could do the multiples and do the calculations. It's really a quantitative methodology. And this is the root of the statement I've made historically, purchase a salary. You can purchase your salary. Now, this equation, it sucks with dividends and corporate equities for so many reasons. So that's something I I think about often, and how these types of systems are just so profound to consider as compared to traditional dividend investor mentality. But if you're talking about like the XYZ calculation, that's what a dividend investor is thinking. So that's a very prudent and restrained methodology for engaging with what the general public sees as gambling. 20% is crazy. It's crazy. Aura numbers are insane, but the principal volatility and the comps, if you want a real estate terminology, the comps are questionable, and it's that's part of the calculation. XYZ is very attractive. Yeah. Look, 100 grand paying 20 grand a year is a salary in many countries. 20 grand changes your life in Southeast Asia or South America, rural Africa. How do you get the X is another story. But isn't that the whole equation we deal with in life? Is how do we save to reach our goals? And it's not easy. I know, guys. I struggle with it myself. How can you be sure it will be here in 10 years? I have no freaking clue. How could we be sure that Netflix movie doesn't occur? What the hell is the name of the movie? Oh my God, that's not helpful. Leave the world behind. How can we be sure that doesn't occur? I don't know. These are things we have to deal with as humans. How are we not worried to get on a subway train that there isn't going to be in an accident? The thing that gets me through the day is be productive, move forward and not back. Understand that fear inhibits your capacity to achieve the things you want to achieve, and fear is meaningful, but it is not unto itself. It's a meaningful part of the equation. But because you fear something doesn't mean it invalidates an action or an activity. And the perfect example of that is like rock climbing and things that are dangerous. Fear does not inhibit those persons from engaging in that activity, so potential repercussions are always a consideration, but we must move forward as humans, and this is part of the risk calculation. How much risk are you taking? And this plays a meaningful role in the concept of position sizing. Hope that helps. Don't look up's a funny one. A humorous take on the end of the world. That was an insane movie. Thank you all for joining me. I hope this was a productive stream. I hope it's funny at times. I hope it's real. I hope it's meaningful. These are the things that I deal with personally for myself, and I know you all go through this shit too. This conversation that we have is personal. So I hope it helps, and I wish you all a wonderful Monday, December 18th, 12:35 p.m. Tell everyone to subscribe, link in the Discord for the most rational community in the entire crypto space. I will catch you guys later this week. Peace.